Hey everybody, David Skarica here. Hope you're all doing good. Yeah, I hope everybody's doing good, as I just said. So I just had to plug in my mic actually. So we're gonna look at the yen again. And we talked about this a few weeks ago, so I thought I'd revisit it because we did do currency this week. We did do the Canadian dollar. So we're gonna look at the yen here, and what we can see with the yen is so this is kind of like the inverse of the yen in terms of it's like 40 yen, 40 on this chart would be 250 yen to the dollar. This is basically more like the yen versus the dollar rather than the dollar versus the yen, if that kind of makes sense. So 64 is like whatever it is now, like almost like about 150, and 130 when it was up here would have been about 70 to 80. So that's the way it works. So you just kind of have to you basically you kind of flip over the number. So 100 would be 100. Like 100 would be $100. Sorry, 100 yen to the dollar. So the yen is now broken down this recent support. And then you can see broken, it's also the lows of, excuse me, in 1998 during the COVID crisis. And then, so we're kind of at these 1999 lows. We're getting approaching them. And if we break them, then we're back here. So this is a story I always like to tell. I don't care if I bore you. It's one of my favorite stories because it has to do with my childhood. I tell this story about like how this has actually affected me because I was a big fan of this. I know some of you are new to the channel too. I was a big fan of this cartoon called Robotech. It was kind of one of the first Japanese animation cartoons. And it's a fascinating story what happened to it afterwards, like legal battles, bankruptcies, because they've been trying to do some kind of live action movie, kind of like they did with Transformers. But anyhow, I won't bore you with those details. But so anyhow, they basically took these three Japanese animation series, turned them into Americanized them, turned them into this one series that was in three parts long, and they were three unrelated series. Anyhow, so then they were going to make their own series to follow up to those three series, but they contracted out Japanese animators and that sort of thing. And then the yen had this huge rally where you can see the yen basically doubled in 1985 into the end of 1987. But it was really this move here. And that basically made it so expensive for them to contract out the Japanese firm they had that was doing the animation that the project went under. So it actually, and then this company named Harmony Gold that owned the rights to the cartoon eventually went bankrupt, and there was all these issues that happened. So that's how, because you always look at these things and they're just abstractions and they're just squiggles and charts, and you're just like, well, how does this actually affect our real life? And then there's something that actually affected that basically this show that was like a big cartoon back in the 80s basically was no more because the yen had this huge rally. So now we're kind of the opposite. And remember, during this rally here, this is when the yen, this is when Japan was essentially booming, in the 80s, 90s, it still wasn't booming, but like, Japan was, 80s, the 70s and 80s, the Japanese yen had a huge, huge rally. And then, we had this big decline in the late 90s, and then this rally here again. This is when the US dollar was really weak throughout the 2000s into like about 2010, 11. And now it's kind of rolled over. And Japan may be the first country that actually has the real currency crisis because of their debt situation. The fact that because their debt is so high, they cannot raise interest rates. I know a lot of people will say, well, the debt domestically owned, that's why they've been able to support this. They're fine. Nothing can ever really happen to them. But where it could happen is a currency. Because if you look at this chart, if you break these 1990 support level, the yen could go back to here, which would be 250 yen, and just as recently as it was about, 100 yen, just as recently at 2020. And that's going to have huge effects inflation wise in Japan, because remember, Japan doesn't really have a lot of natural resources. I know they have the big electronics and auto industries, but steel industry. But the problem in Japan is they have to import all the natural resources. Remember, that was one of the reasons Japan bombed Pearl Harbor, was because the US was starting to cut them off on in terms of gold. Um, going forward, or it's gold in terms of oil back then. So anyhow, I just wanted to show you this. So the Japanese yen actually broke down. We talked about it, getting close to breaking down a few weeks ago. So we'll have to see what this means. Now, one thing that's has been able to happen because of the yen breakdown in the last 10 years, you can see the Nikkei is really soared. So what's happened is the combination of the yen declining, which helps Japanese. I talked about input costs, but also output costs, because all of a sudden, if they're selling cars in euros or US dollars, of course that means more when you convert it back to yen, more profitability. Or like if Nintendo or Sony are selling their their PlayStation or their Wii's or whatever in US dollars, and when they convert it to yen, they make more money. So this caused the Japanese market to actually go back to the 1990 highs, and they really expanded the balance sheet. One criticism Japan had during this whole period of kind of bust and deflation was that people were criticizing them for not printing enough money, for not doing QE, etc. But they really did it more out of necessity, because the yen, sorry, the debt was so high, they kind of had to buy their own bonds because no one else would, and there was just too much debt out there, for interest payments. Because remember, when governments buy their own bonds, and I've talked about this in the past, the interest goes right back into the treasury. So you can see this huge move up, and that if you go look at the Japanese balance sheet of the central bank, this is when it really moved here. And actually, in 2014, right when it started, this breakout, I talked about in Addicted to Profits, and in the financial intelligence report, I talked about Japanese stocks. Actually, it was a little higher. This is, we can't get the exact bottom. It was about 14,000. I said I thought that Japanese stocks were an excellent buy, because even coming off the lows, they were 2/3 off their all-time highs, and even adjusted for the little inflation Japan had in that 25 years, it was if adjusting for inflation, it was probably close to 75%. So a lot of stocks in Japan were cheap. So anyhow, thought I'd just show that. So it just shows you the power of printing money too, right? The Japanese stock market didn't do anything, then all of a sudden they expand the balance sheet, and that combined with a weaker yen causes Japanese stocks to soar in price. Because I don't think anyone 10 years ago in 2014, too many people thought. Even I was bullish, and I didn't think that in 10 years we'd be back at that high. But just shows you too that when you're in a secular bear market, like actually the Japanese market took longer than 1929. Took 25 years after 1929 for the Dow to recapture the pre-crash high. The Japanese market took nearly 35 years. So that's how long that bear market was. So yep, that's today's stock chart of the day. The Japanese yen. We have very, very interesting chart here, and we'll see what happens going forward if we break down on the Japanese yen. And like really, again, when you break that 1990 low, you're talking really almost have to fill this gap. I don't know if you want to call it a gap or this huge move. There's really no support back to like that 40 to 45, which would be basically 225 to 250 on the end, going back into the early 80s. Hey, and maybe Robotech will make a comeback. Okay, everybody, take care.